I'm curious, how do you see that affecting sort of traditional finance? Do you think it's kind of like move over, or, you know, kind of, if you can't beat them, join them? Yeah.
They're going to join. They're joining. They're joining up big time. They joined. Half of them already joined. Half of them are joining up. That's it. It's, as far as I'm concerned, we won.
Tell us more.
Not only does our industry allow them to gain a larger market and successfully compete in that market, but it actually allows them to do their compliance and do their transactions in a more efficient way. So for example, you can automate away certain compliance checks in a way that their failure rate goes way down. That's one of the things, for example, we work on with identity oracles and other things. So the institutions see massive value in this. The size of the crypto market passing 2 trillion, I think, locked the most important ones into being part of our industry right there when that happened. There was still a very negative regulatory environment. The regulatory environment, people that don't work with institutions don't fully, I think, understand how much of a signal or how much of a determining factor that is for them. That is, you know, right there after profitability, because it is basically going to be their biggest source of cost, their biggest source of brand risk, their biggest source of risk in general. And the financial industry and the financial world are really about returns versus risk. So if you can eliminate their compliance risk, their regulatory risk, and it's all just profit on the other end, then these places have existed for so long because they're very good at capturing that profit. So I think they all see the profit equation. I think the only thing that's missing is that the risk goes away from a regulatory point of view and from a legal and compliance point of view. I think if there are systems that allow them to comply with a thoughtfully crafted set of rules that actually makes it cheaper and less risky for them to do a transaction of a tokenized equity than it does to do a traditional equity transaction, they will shift to doing all of their transactions in tokenized assets, because it is not only more efficient and gives them access to a market and has better properties in terms of settlement, but because it is actually less risky for them to do that.